right, let's talk about commodities a little bit because certainly oil is driving the market today, but gold is taking a little bit of a leg lower, perhaps on that stronger dollar that we're seeing. It's been creeping up. Let's get to an expert who can talk about where gold is going next because she has high hopes for it. On the satellite with us, Salita Marcelli. She's the global head of fixed income at JPMorgan. Great to have you on the show.
Hi, Jackie. Great to be here.
Let's start first with your call on gold. Right now we're trading just a little bit under 1,300, but certainly this trade has had a lot of legs, and as long as the Fed isn't hiking and that dollar isn't moving around too much, gold could probably go higher?
Yes, we think that gold can go a lot higher from here. We're actually recommending our clients to position for a new and very long bull market for gold. And I think 1,400 is very much in the cards this year. Look, I think with so many negative nominal rates around the world and even more countries having negative real rates, gold is looking more and more attractive every single day. It's a non-yielding asset and it has a minimal storage cost. So when you compare it to negative yielding assets, it actually pretty much has a positive carry. Also, I think central banks might consider diversifying their reserves into gold with the fear that they might be getting negative rates on their existing holdings. And gold is, I think, a great portfolio hedge in an environment where the world government bonds are yielding at historically low levels. In a way, gold may replace government bonds as the next risk-off trade. So yes, we're very hopeful of gold.
All right, so it sounds like the safe haven trade is back on for gold because it's kind of been dead for a while.
Yes.
Okay, and let's talk about your time horizon because 1,400 is still a ways away. What are the levels we have to break through, and how long do you think it takes to get to that mark?
So I think in the near term, we might see a mini correction, a healthy correction, because we're seeing some extreme positioning, especially in the futures market. So, we can see it down to, maybe 1260 or so, or even below. But I would say that 1,400 is very likely this year.
All right, I want to toss it to Scott Nations for a question to Salita, and I'm going to warn you, Salita, that he hates gold. So, Scott, go ahead.
Well, Jackie, I may surprise you a little bit in a few minutes, but Salita, I have a question, and it's about the fact that we've seen gold for quite a while trade in a range between, say, about 1230 and 1275, and then over the past couple of weeks, it broke out to the upside convincingly, ran up, got above 1,300, but could not stay there and has come all the way back and more. What do you make of the fact that we had this big breakout that was so convincingly rejected?
Well, I think gold has moved very fast, right? So there's a little bit of profit taking there. And I think that when you see more of a risk of sentiment in the market and more negative yields coming into the market, there's going to be even more retail participation that we would see in the ETF market. I think we saw fast money coming in, but even though ETFs have picked up significantly in January, February, we are nowhere close to where the peak was in 2012. So I think people are, watching the Fed, watching the where the dollar is going to go, but I think there's going to be more legs to the gold rally this year.
Salita, final question on the dollar right now. That's definitely been influencing not just the whole commodities complex, but certainly the gold trade. As I mentioned, creeping up just a little bit from those lower levels that we were seeing a little bit earlier in the month. What do you do if the dollar goes higher from here?
Well, of course, it's negative news for commodities, but when it comes to oil, for example, we think that 45 to 50 is the right range for the next year. We see both the bearish and the bullish case for it. It's a struggle between the production cost in the U.S. and the OPEC's fight for market share. We don't have a high conviction for either way for oil. I think it's going to be range bound. And the dollar, we think versus other currencies, for example, euro will be range bound, yen will be stronger versus the US dollar, but I think the oil is going to be range bound.
Okay, Salita, great to have you on the program. I'll have you back on again soon. Meantime, let's get straight to it. Scott Nations, you're trading this, and you tipped me off here that you're going to surprise me. So I'm guessing you're interested in possibly getting into the gold trade.
I am. And Salita really laid out the fundamental reasons that you might buy gold right now. Negative interest rate policy around the world, lower for longer here. And then something that really strikes me, if you look at the chart, is there's this huge support at 1250 now. So
yeah.
I would be a buyer short term of the June gold contract at that 1250 level. So I don't want to buy it here. This is a little bit like Brian's trade in that I want to let it come back to me a little bit. But I would be a buyer of June gold at 1250. My target to the upside would be 1275. I picked that level because that's the top of that recent range. And then my stop would be 1240 because I know that if we get very much below 1250, I'm wrong. My thesis is wrong. And so I want to pull the plug really quickly if we get much below 1250.
Right?
Well, yeah, I mean, I like that 1250 level. I think that's a key level that we're going to consolidate around. I think we're going to continue to do that. I'm a buyer of gold. I think I like Solida's sort of thesis that 1400 is in the cards somewhere down the road here. So below 1250, I'd be a buyer. I don't necessarily need to get out of the stuff.
Isn't something that we typically talk about, but that's a great point, right?
Yeah, exactly. You know, when you see this low interest rate environment, this negative rate environment that we're in, if you're going to want to own risk, I know we talked about gold as safe haven. I almost think of it as a risk on trade because I think gold goes higher just as equities go higher because equities are moving higher with this low interest rate environment. That puts people into gold. So below 1250, I think it's a great do. I think you get long there. I'm willing to do it myself, and so I love this trade.
Okay. Let's go ahead and leave it on that note and get the bottom line here. Scott is buying gold. He's buying it at 1250 on a pullback, targeting a move up to 1275. Each point in this trade worth $100, so he's risking 1,000 to make 2,500.